Welcome to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, as well as joined by Adam Freund, partner of Main Financial Group. I was going to put you as president. Is that okay?
Yes, well, absolutely.
He was actually pointing at me, trying to confuse the audience, so
That's
it would be
right.
perfect when you were saying that.
That's right.
I love it. Well, to our viewers at home, as you can see, we always have fun on this show. We have such a good time. And today's show, we're going to be talking about the psychology of money. And when you think about that, so many different emotions play into finances. I mean, we spend a lot of times talking about taxes. We talk about the market. We talk about Social Security, everything like that. But what about the true behavioral science, the emotions, the psychology behind finances? We're going to uncover that today. As we both know, or all of us know, fear and greed are sometimes the two main drivers in decisions. So thank you for being with us today. Jordan, how are you?
I'm excited to be here now that we've got that straight who's who. So
Right, you're both president.
Yeah,
I just
we
want
both
you to
are. That's
know.
fine. Go.
Congratulations, Adam.
Oh, thank you. I am the president. Yes.
Yeah, congratulations.
Yeah, exactly. Thank you. I appreciate that.
Well, before we get started, I want to ask you a really fun question.
Ooh.
So when it comes to movies and going to the movies, are you the kind of person that likes to see the movie first or read the reviews first? Jordan?
I just go for it.
You just go for
He
it.
is definitely, I already know his answer. He looks at all the reviews first.
You
See, that's
do?
why we're a good pair here.
Yeah. No, Rotten Tomato is probably one of the best sites because it gives you an average of what the critics gave it and what the audience gave it. And usually if the audience's score is higher than the critic score, I will definitely gravitate to that movie.
Interesting.
Yeah. So I don't, because, quite frankly, movies are expensive. I don't want to spend all that money. If I'm going to, I'd rather wait for it to come out on video.
Well, I like all the series. Ever since COVID, everything is a series now, right?
Yes.
Versus a movie. So, and there are so many series. So my wife and I love to try to find a new series. And then, then you get hooked on it and it's like, wow, that was really a good series.
I thought you meant a movie series, but yes.
No, it's a streaming stuff.
Netflix
Yeah,
and stuff.
yeah.
Netflix, we could use an extra money. What about you, Cindy? Cynthia, what do you do?
I'm like Jordan. I actually just will either go to a movie or watch a movie, but then I do like to see what other people think or said after I watch it.
Yeah.
Like I'll see, did they feel the same way? But yeah, so I'm one that will.
And
just
are
know.
you both previews guys? Like I have to be at the theater in enough time. I want to see the previews.
Oh, I love the trailers.
I love the trailers.
Yes.
Really?
Yeah.
I find them as kind of a waste of time. I like to go there just for the movie. I know that sounds terrible, doesn't it? But I do. I like to just go there.
You probably don't like popcorn either.
I do like popcorn.
Oh, okay,
I
good.
love Raisinets, so that's my favorite. Now see how we digress on this show.
Popcorn, Sour Patch Kids, butter through a straw.
Oh, my
mix it all up.
Oh,
and that's
God.
my.
All right. Good night,
Okay.
folks. Thanks
I love
for
it.
watching.
Thank you for being with us, the two presidents here. So talking about emotions, let's start with the one that a lot of people feel. And I understand this completely. Let's start with fear. Why does fear actually play such a powerful role in money decisions?
Well, yeah, go ahead.
I'm going to say fear is emotional, not mathematical.
Right, absolutely. In fact, you have an acronym that you use for fear, don't you?
I do.
What is-
False evidence appearing real.
False
Oh,
evidence
is
appearing
that
real.
good?
It's not mine. I didn't patent it, but
That is
promise.
great.
Little TM next to it, right? Trademark.
yeah, I can't do that.
No, I mean, people out there, the problem we always see is that losses for some reason feel worse than gains.
That's
right?
true.
Then gains feel good.
Then gains feel good. They feel the loss, and therefore there's a fear. Well, what if it will go to zero? What if my account will go to zero? Have you ever had an account go to zero?
No.
No.
Knock on.
In our lifetime and even previous lifetimes, since I knew President Taft, there has never been a time, even during the Great Depression, where the stock market went to zero. Never.
Well, I think that
Yeah.
the big impact is when people get closer in retirement. So we use this a mountain climbing analogy of your life cycle. You've heard us talk about it on this show.
Yep.
Your working years, or you're going up the mountain, your accumulation years. And as you get close to retirement, you're on top of the mountain. You've got buckets of money trying to figure out what to do with Social Security, pensions, 401ks, these things. But really, retirement is getting down the mountain safely, which is distribution planning.
Yeah.
And that is where the fear comes in.
Yeah.
Because a bad decision in retirement is amplified. Or whatever the good word is there. It makes it a lot worse because you don't have as much time and you don't have the money coming back in to maybe make good for that bad choice, that bad error, whether that be a wrong pattern of distribution, whether it be just a straight stock market loss, whether it be not planning for a tax bill that could derail things for that year.
Legislative risks, stock market risks, where you're taking out at the wrong time in the stock market. We call that sequence of returns risk.
Right.
So there's a lot of things that we understand that can derail you on the way down.
The fear of when you lose, you need to make more to get back to where you were. Think about this conceptually, Cynthia. You have $100,
okay,
and you lose $30 in the market, 30%.
All right, let me write this down.
Okay, you got that? Now you're at 70.
Yep.
I am at 70. That's
now
good.
you earn the next year, let's earn 30% back.
Oh, okay, 70.
Are we back to $100?
Carry the one. No,
we're at 91.
We're at 91.
We're at 91. So if we have a losing year, we've got to make more to get back than we were. Now, wait a minute. Let's throw a withdrawal in there out of an account that's already down because your retirement, you're taking money out.
Yes.
So let's take the $100. We lose 30%. We're down to 70. Let's take $5 out, 5% withdrawal.
Okay.
Now we're down to only $66.
That's, yes.
And now we earn 30% back the next year. We're not at 91.
No.
We're in the low 80s.
Right.
Wow.
And so that a bad choice and a withdrawal makes things, really just amplifies it, if you will, or magnifies it to say, you can't afford a lot of bad choices in retirement that you could maybe in your working years.
So we're not saying that
sense.
these fears aren't real, because there are some fears. There's some things that people have to be aware of. But there's planning, and planning around those fears can mitigate the fears, right? Oh, that's a big word, mitigate.
That's a good one.
And that means getting down that mountain safely, right? So most accidents in mountain climbing happen when?
On the way down.
On the way down. So it's because they're trying to use the same fundamentals that they use to climb a mountain to get down the mountain.
That's our long-winded answer to your very first question.
Woo!
But it makes perfect sense. And so before we take our first commercial break, I do want to ask, when does this fear actually show up in real life financial behavior?
Yeah, I mean, there's all kinds. Panic selling.
Panic selling.
Well, the market is crashing. Let's sell because we don't have an investment discipline or structure in place.
There you go.
Now you're selling low. And then when markets are going up, let's buy. Emotional selling. But on the fear side, it shows its way on the way down,
How
right?
about
Adam?
excessive cash?
Oh,
That's another one. If you have too much cash in the bank, well, that's kind of silly now too.
Or just avoiding it entirely.
Yep.
A lot of people want to do what's the animal that puts the head in the sand?
The ostrich.
Ostrich.
Yeah, wants to do the ostrich and say, hey, you know what, I don't even want to address what's going on right now or put together a plan. I'm just going to keep doing what I'm doing. What do we call that? Buy and hope?
Buy and hope. That's
instead of buy and hold.
Yes,
I think the other thing we've seen recently is the overreacting to short-term scenarios.
Yeah.
Okay.
Right, like
Last April.
Last April, right? We had what they call Liberation Day and the tariffs, and for 2 weeks the market went down significantly, and a lot of people fear-wise started to sell.
Right.
And people that had long-range investment planning and good strategic discipline in their portfolio, they had hedging and built in place, and they didn't have to make an emotional, fear-driven choice.
Right.
Okay. Again, proper planning gives peace of mind. That's really what it comes down to, correct? So let's talk about the RIPT report. We can't get a better plan than that. Jordan, spend some time before we take our first commercial break. What is the RIPT report?
Yeah, the RIPT report is our offer to come in and get a free customized financial plan, a written financial plan for you for whatever your situation is. We use this analogy, the RIPT, R-I-P-T. The R stands for risk. How much risk or how fast are you driving your portfolio? Is it driving at that speed? How fast or slow do you want to drive it? The I is the income side. Do you have an income plan or is it more of a guess? What if you screw up and live too long? We can help put a roadmap together for your retirement. The P is a portfolio health. We're going to talk a little bit about that today. What are you paying in fees? What is your historical returns been, or what are they? What sectors are you investing in? The T is taxation. Do you have a tax plan, or is it just wait and see what taxes do? How can you be proactive with some of your tax strategy? We'll also give you a copy of our book that was released in the end of 2025, Main Street Millionaire. It's a 300-page financial planning guide full of great real-world stories about our clients. So 2 meetings out of your life, come on in. We've got 5 offices around Metro Detroit. We've got Brighton, Northville, Troy, Bloomfield Hills, and Ann Arbor.
Yep.
And we'd love to see you for a couple meetings.
These are fear busters.
Oh,
Yes,
fear busters.
I love
like
that.
it.
Thank you.
Jordan, thank you. Adam, thank you. To our viewers at home, the number to call, once again, 844-747-RIPT. 844-747-8937 is RIPT Yes. Once again, you're calling in to book that complimentary consultation with the team. Let them get to know you one-on-one, your goals, your hopes, and your dreams for retirement. We're going to take a very short commercial break. We're a little short on time. We'll be right back momentarily talking more about the psychology of finance. And let's talk about greed and fear when we come back together. Stay tuned.
I started out actually going to college, and I was going to be a music teacher. I realized very early on, like at the end of my first semester, that it just was not for me. Fast forward many years later, my parents are educators. My dad quit being a teacher and became a real estate and commercial real estate. And after I graduated college, I decided I would go and work for him. And what I really liked was helping people make money. And I realized that that was more my calling than actually selling real estate. So I ended up getting into the financial advising world. It was a big jump, but it was the fact that I was going to be helping people rather than selling people. And that makes a huge difference in my mind. I have enjoyed it tremendously. When you can tell a client, hey, guess what? You can retire. It's one of the best days of my life right there. It's not about my goals. It's not about my office's goals. It's about their goals. It's their money. We need to educate them in order for them to continue to live in a manner of which they become accustomed. Selling is terrible. Educating, getting people to understand why we need to do it this way and consult with them, that's the way to do it.
Welcome back to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, and Adam Freund, partner at Main Financial Group. We're talking all about the psychology of money, if you will. We talked about fear in this first segment. Now we're going to talk about greed in this next one. So thank you for joining us today. We talk about the psychology of money. So gentlemen, obviously, when we're thinking about fear, the next one that comes into play would be greed. Why more is never enough. I knew something was coming. I was
Greed,
I
love it. Money, money, money.
Boy, that's real money too. That's
No,
not
it's
a prop.
not. It's a prop.
It looks
Okay.
real.
Yeah. Well, let's go use it. Let's see what happens.
How does greed influence money behavior, if you will?
Yeah.
Well,
Wow.
my daughter uses the word FOMO,
Yeah.
Yes.
fear of missing out.
I
right?
love that.
And I've got a great scenario about, we had a gentleman that came in. So if everyone followed the market last year in 25, I guess we're dating ourselves. The commodities had a great year, right?
Yep.
Gold was great, but it wasn't gold. It was silver.
Silver.
Oh, everyone went to silver. It didn't get to 200%, but it was up there. It was a very big return. And so we had a new prospect that came in and said, I think it was like the 4th or 5th of January of 2026, and said, I want to move everything I have to silver. It's the new gold. It's going to be the future. And what happened in January of 26 with silver? It was down almost a third, almost 30%. It was not very good in 1 month.
No.
And again, here was his FOMO. Here's what his greed. Instead of having a nice, diversified, allocated portfolio, He wanted to put everything into one sector, chasing that return. Like a lot of people have been chasing AI for the last year.
Yep.
And with that thrill and that rush, and clearly that wasn't his best choice.
No, not at all.
Wow.
And what is it about being the most expensive, most wealthy person in the graveyard?
Yeah.
What difference, you know?
It's very true.
And I think other people also can kind of confuse luck with skill.
There you
Oh,
go.
yes, yes.
How about that? You know, they maybe had a good return in one area, or they bought something, or their sister told them to buy this or that, or
And it
someone
just
around
happened to work.
and it happened to work. Now all of a sudden, people might think they're skilled at trading and buying stocks, and get away from diversification of sectors.
Yeah.
And that really is when things become dangerous. So greed can derail you, especially in retirement, almost as much as fear can.
Right.
Okay. And when you're greedy, what about ignoring diversification?
Well, Jordan just alluded to that, right? When you're greeting, I mean, right now, people are coming in and they are way over valued in tech stocks.
Yeah.
And it's because they've become greedy. They think it can never lose. There's a euphoria around it. Oh, AI is going to be all over the place. We've got to build all these data centers, all Google and Microsoft and all this other stuff. And the issue is that we always come up with is that you've got to diversify, because this ride isn't going to go on forever. And they get greedy and they want more and they want more. To what end?
Well,
Yes,
what end?
to what end,
exactly. If you look at technology, yeah, it's been great the last several years, but where was it in 2022? It was actually tanked.
Yep.
And the flip side, look at energy, was dead last before COVID, then went up and was number one for a few years, then went way back down.
Yes.
So the idea is you can't just pick one area, one sector, one stock, and think that you're going to time it just right. That's market timing. That's day trade. That's basically casino,
That's
right?
gambling.
So all of us here in Detroit, you can't see it in this picture, but there are like 3 casinos back here, MGM and all that.
MGM, Greek.
Go down there, because that's what you're doing when you're chasing returns.
Yep.
Interesting.
And it really comes down to more of an investment discipline, which I know we're going to get to later in the show. But the fear and the FOMO greed, they could destroy your portfolio.
I just
Most
wish we
definitely.
had a plan for that. I mean, something that would help them
Me
just
too.
keep on that track, keep on the narrow. I wish we had something that would tackle greed and fear.
I do too.
Well, I wonder what that would be.
I have no
That might
idea.
be a RIP report.
Oh, this thing laying in front of me. That's right.
That's fabulous.
Thank you.
It really, truly is.
Are we ready to go to break yet?
Well,
no, we don't
no.
have to.
Yeah,
weren't,
you're
but-
not the host, Adam.
We'll be right back, folks.
Yeah.
No,
I did
no.
want to ask one more question.
Yeah, go ahead. Let's go. Keep it going.
Here we go. Where do you see greed show up the most as people near retirement? Where are you seeing it the most? Adam?
Well, I think part of it's funny. It comes into different phases. We get people that are getting close to retirement, and suddenly there's a loss in the market. Now they don't want to do anything because they're worried about missing out. Right? They're greedy because they want to get back to where they were before. Okay, fine. Then they come to us and say, "Oh, we're doing great. We're doing great. We don't want to make a change because we're going to get more. We're going to have even more." Right. And this always happens. It seems like as they're getting closer and closer to to the top of that mountain, coming down that
I think
mountain.
we see, to
Yes,
answer your question, I
yes.
think we see it with concentrated positions.
There you go.
Where they're all of a sudden what's the word?
Overvalued,
They're putting so much into one little area and getting away from the overall structure of diversification, and ignoring that, and also ignoring life changes that may happen to them,
There you
right?
go.
As you do a retirement plan, you have to plan for different things, right? Healthcare, Medicare, long-term care, different things that come in. You can't just get away from that because, boy, the media says the Dow Jones is over 50,000, which it goes up and down over that a lot late. But at the end of the day, stick to your plan, your fundamentals, your discipline. What is your investment discipline?
Yep.
Makes perfect sense. Well, Adam, great time for you to hold up the RIP report if you would like.
I wish we
Jordan,
had one.
Can we
Yeah.
talk about what the offer is?
Yeah, the offers that come in for 2 things: a free written financial plan that's just for you, and a free copy of our new book from last year, the RIP Report, RIPT. Get an evaluation of your risk, your income, or actually get an income roadmap designed just for you. A portfolio health, we're going to talk about that in the next segment, and a good tax strategy. Our book is a great 300-page read to guide you through retirement, a lot of actual client stories and an easy-to-read layman's terms. So call the number and come see us. It'll take 2 meetings out of your life, one of our 5 offices in Metro Detroit.
We have an all-star cast that can help you out. So make sure you come in, call us.
Absolutely, Jordan. Thank you so much. Adam, thank you so much. To our viewers at home, once again, the number is on your screen, 844-RIPPED-YES. 844-RIPPED-YES. That's 844-747-8937. Or just grab your smartphone, click on the QR code at the bottom corner of your screen. That'll take you right to the landing page, of course, of Main Financial Group. Schedule your time accordingly. We're talking about the importance of proper planning in your retirement years. We have so much more about the psychology of money when we return.
A recent MarketWatch story followed a 63-year-old who had everything mapped out for an early retirement until the market dropped. Overnight, his confidence was shaken. Years of saving and planning suddenly felt uncertain.
It's a familiar story, especially when headlines are filled with volatility and downturns. But the truth is, retirement doesn't have to hinge on market timing.
With the right plan, you can build a retirement strategy that prepares for uncertainty. It's about balance, growth for the future, protection for now, and a flexible income strategy to help you stay the course.
The markets may fluctuate, but your retirement doesn't have to. A diversified strategy built around your lifestyle and goals can help you retire and stay retired.
Welcome back to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, as well as joined by Adam Freund, partner of Main Financial Group. We're talking all about the psychology of money. We've talked about fear, we've talked about greed. In this next final segment, let's talk about discipline and how that plays a role. So thank you for being with us today. So gentlemen, this next one, discipline, the antidote to both.
Yep.
So fear and greed are the problem. What role overall does discipline play? Jordan?
This is probably the most important question. And we stole this from a good friend of ours who's an investment advisor, financial advisor. What is your investment discipline? Or what discipline does your advisor or do you employ in your portfolio? And what does that really mean? Well, I'll give you some examples. Are you a buy and hope? That's a discipline where you just buy positions and hope and ride them out. They go up and down. You don't touch them. That's one way.
Yeah.
Are you an emotional seller? That's a discipline, right? When things are good, you're buying, which is buying high. And when things are you're panic selling. When things are low, now you're selling low. But that's a discipline, emotional. Are you a day trader?
No.
Trying to time the market? That's a discipline, right?
That is.
Or do you have any data-driven discipline in your portfolio? That's what we like to do. So, you know, there's these things called algorithms, right? That you can build into strategies.
Right.
So in the stock market or in the market there, if you remember back to your schooling days, both of you, the leading and lagging, as I put on my educator hat here, leading and lagging economic indicators, right? What are these things? These are things that indicate, maybe try to project trends in markets, right? So interest rates are one, GDP, you know, which is our jobs reports, the real estate market, stock market valuation, stock market earnings. There's a lot more. The manufacturing, the number of orders, they track that. There are all these things are leading, lagging economic indicators. So
treasuries, I mean, the list can keep going on.
So we like to look at strategies that employ looking at all of those indicators to forecast, not that we're going to time the market right at all times, but to know when things are trending in the wrong direction, to have fail safes built in. Right. And, you know, we kind of look at a green, yellow, red approach to say, hey, when all the indicators are green, boy, we should be full going in the market, right? When we got green and yellow, maybe we should take the foot off the pedal a little bit. When we've got 2 yellows, let's go even more. If we've got a yellow and red, let's get even more. And if we've got double red like we had a year ago for Liberation Day, all the indicators were pointing in the direction there was going to be some problems. That's when you can go to cash treasuries or take a time out and go to the sideline. So that when you have an investment discipline that's driven by data and algorithms, it really reduces fear and greed.
Most definitely.
Because you know, now in that example about Liberation Day, while all the indicators said double red in March, that was ahead of the April 2nd Liberation Day. there wasn't full double greens till
No.
late July,
Right.
meaning that maybe we missed
slowly
out
got back
on
into.
some of the write-up because we're not
Correct.
day traders.
No.
Okay.
But having that underlying discipline gives people a lot more confidence where, hey, when they know a major event is happening, whether it be a tariff thing or another event, that they have systems put in place to hedge some of that loss.
Most
And I
definitely.
think so many people, especially when the market's up, I mean, since 2009, oh my goodness, what a run we've had.
Yes.
People get away from that discipline and they get the greedy, the casino taste.
Our
Yes.
job is to take emotion out of buying and selling.
There's no crying in baseball. Wasn't
There's
that for a
no crying in baseball.
That's right, it was.
There's a
League
lot
of
of
their own.
crying in the stock market.
Yeah, no.
But that is, you take emotion out of what it is that you're doing and just look at this analytically.
Yes.
And the problem is that most people, when they're talking about their own money, it's so personal to them.
Of course.
It means so much. They worked so hard for that money
Yes.
that to let it go or to do something with discipline is very difficult. But that's where a company like ours comes into phase. How do we make sure that the emotion is not part of it?
Well, I think planning replaces panic.
There you go.
Absolutely.
Right, good planning gets that fear. That's not totally eliminated, but it's going to significantly reduce it, right? And we look at allocating things, income versus growth, right? So your buckets that are the designated that have to give you income should go in this category to be spitting out income and not have to be straddled with giving you growth. And vice versa, your growth buckets should be out there growing and having fun celebrating and
Yeah,
not
you're right.
being worn or dragged down by having to produce income for you.
Correct.
So I think dividing and conquering, good planning, systematic approaching, you can really address this fear and greed. But what a unique show today, Cynthia.
Yes, it
This was a
is.
great topic
The
you picked.
psychology of... No, I know.
It's true because so many people operate out of emotion. And when it comes to retirement planning, you have to keep a level head. So gentlemen, thank you for always doing that for your clients. And I can't believe, Jordan and Adam, we're at the end of another amazing episode, but please spend some time talking about what people can receive when they call in today.
Yeah, when they call in today, come in to see us. 2 meetings out of your life. Any of our 5 offices, you can come see us at. We've got a great team of advisors. If you come out to Brighton or Northville, you can see Adam and I. But come and get your own free financial plan. The RIP report, we call it. Get your risk in line, get an income plan written, not a guess. Get your portfolio up to snuff, as we talked about today, with some great strategies. A tax plan, which we've talked about on other shows. Let's get Uncle Sam out of your pocketbook. Make sure we'll also give you a copy of our new book, Main Street Millionaire, How Real People Build Real Wealth and Keep it. It's about 300 pages, a great read for all of our clients out there. We'd love to give you both these things at no cost. Just come on and see us.
Perfect. Thank you so much, Jordan. Thank you, Adam. To the viewers at home, the number to call, 844-747-8937, 844-RIP-DS. Remember, you're calling in for that complimentary consultation, and when you schedule that and come into the office, you'll also receive a copy of Jordan's book, The Main Street Millionaire. Thank you for being with us on today's show. Be safe, be happy, and be blessed. We'll see you back 1 week from today on The Main Money Show, where Wall Street meets Main Street. Take care now. We'll see you soon.